With the midterm elections just 2 months away, Janet Yellen is touting the economic impact of the Biden administration's policies. The Treasury Secretary spoke at a Ford electric vehicle center in Michigan. She says she feels good about where the economy is headed.
After the progress we've made over the past few months, I am more optimistic about the course of our economy than I have been for quite a while, and I know we're headed in the right direction.
For more, Mark Zandi joins me now. He is the chief economist of Moody's Analytics, where he directs economic research. Mark, it's good to see you again. So Secretary Yellen says the U.S. economy is headed in the right direction. Leaving aside whether that's a wise thing to say in an election year or not, is the economy really headed in the right direction?
Well, in many respects, yes, John. I mean, the job market is about as good as it gets. We're creating lots of jobs. Last month, we created over 300,000. Typically be closer to 100K. We've got a record number, or close to a record number, of unfilled job positions. Layoffs are, pretty close to record lows. We got a data point this morning on initial claims for unemployment insurance. So if some people become unemployed, they go down to the unemployment insurance office or do that online now and file, and that's very low. So unemployment's very low. All the statistics that economists look at to judge the job market are very good. Obviously, though, the problem here from an economic perspective is inflation. That's just too high. It's coming in. Gas prices are back down, and I suspect food prices are going to start coming in here pretty soon. But as long as inflation is as high as it is, I don't think anyone's going to be convinced that the economy's, going in the right direction. We got to get those inflation statistics back down.
We will get some inflation information next week, I believe. Give us a preview. Educate us on what we should be looking for in those numbers. There will be the top line number. And there will be a lot of punditry about that. But is there something specific to look for inside inflation that, for you, gives you a signal about whether the economy is moving one way or the other?
Well, first, the good news, John, it's going to be a good report. Inflation is going to decline, and that goes back to the oil prices, gasoline prices. I mean, if you go back to June, we were paying a record $5 on the nose, $5 for a gallon of regular unleaded. That's now well south of $4 and headed lower. And so that's going to show up in this inflation report, the consumer price index data that we get next week. So we're going to see a decline. That's good. And so the headlines are all really good. The thing, though, that economists and clearly the folks at the Federal Reserve focus on is what we call core inflation. That's excluding food and energy. And that's we do that because that's a better forecast of where inflation is headed. And, that's 5%-ish year over year. That's too high. It's got to be closer to 2.5 at the highest. So I'll take a look at that and focus on that. If that comes in, more modestly, suggests inflation is starting to moderate, I'll take a lot of solace in that. And conversely, obviously, if it doesn't, then some hand-wringing as a result. But the core number is the key number.
And I want to talk about housing prices for a moment. The national average 30-year fixed mortgage rate is now over 6%. And Janet Yellen, Treasury Secretary, talked about that. Let's listen to what she had to say.
I believe it's a national imperative to improve the affordability of housing, and that will confer substantial health, social, and economic benefits on low and middle income families. Simply put, it should be easy, not hard, to put a roof over your head.
So, Mark, if it should be easy, not hard, to put a roof over your head, how easy or hard is it to improve that situation? And what would be required?
It's tough. Yeah, no, it's very difficult. I mean, we got a big problem with affordability now because mortgage rates have jumped. And, to some degree, this is by design, right? So the key problem is inflation. We need to get that down. The Federal Reserve is raising interest rates in an effort to slow the economy. The housing market is the most interest rate sensitive sector of the economy. So it's no surprise that housing is taking it on the chin. And it's happening because affordability has been crushed by the higher mortgage rates. So you add the high mortgage rates to the high house prices, and it's just unaffordable for first-time home buyers, and life is very difficult for trade-up buyers. Having said that, to the longer-term solution to this problem is more supply. We need more housing. We need more rental housing. We need more home ownership for home ownership housing, single family housing. And policymakers, lawmakers really could act here, but it takes a piece of legislation, John. And I don't think that's going to happen anytime soon. Certainly not, before this election. It'll have to happen in the next Congress, perhaps.
Right. Not a quick fix. Mark Zandi, thanks very much for being with us.